Good morning, everyone. It's Wednesday, February 4th, and welcome to 7 Investing Live. This is our live stream interactive event where we put a spotlight on several of the stock market's most intriguing opportunities. My name is Simon Erickson. I'm founder and CEO of 7 Investing. You can go to our website, 7investing.com, if you'd like to see all of our long-term investing opportunities, as well as our 5 monthly best buys. And if you get started today, your first 7 days of 7 Investing are absolutely free. We can check out everything we have to offer. I'm excited to welcome back to the show again today my special guest, Emmett Savage. He is the CEO of My Wall Street. We have a very fun show for you here today. We're going to be talking about special situations and getting into what it means to bet on the jockey rather than necessarily betting on the horse. Emmett, I speak for everybody when I say welcome back to 7 Investing Live this morning.
Delighted to be back, Simon. I'm becoming a habit. I actually
Yes.
really enjoyed our last two shows, so let's do a third and hopefully bring a company a bit like the first two that might be less well known, but by the end of the show, I think we'll have overturned a nice opportunity for the listeners.
Yes, Ouster. We talked about solid straight lidar
hmm
and the sensors that were associated with that. We also talked about the eVTOL industry with Vertical Aerospace. We're going to be talking about Computer Modeling Group as the company of our stock of focus here today. We're going to get into that in a minute, but let me first set the table about what it means to invest in special situations. Because just earlier today, or just not today, excuse me, earlier this year, we saw Warren Buffett is stepping down as the CEO of Berkshire Hathaway, right? This was a huge tenure that he had, 6 decades at the helm of Berkshire Hathaway. And we almost forget what it was that he took the helm of back in 1965 when he became CEO of the company. Berkshire Hathaway was the combination of the Hathaway Mill, which was a textile mill in Massachusetts that really had two locations, and Berkshire Cotton. This was not a glamorous company. This was not something that almost anybody else even wanted to invest in. And in the early 1960s, Warren Buffett, of course, saw an opportunity to buy this at 1/3 of its book value and then expand it from these two simple textile mills in New England area of the Northeast United States, and of course, turn it into one of the most successful publicly traded stocks of all time. That is a special situation. That is a very, very talented leader and a group of investors right from the start that completely turned around a struggling textile mill into one of the greatest companies of all time. Now, that's high praise. I mean, we're not necessarily finding the next Berkshire here. That's a big statement for anybody to make, but it just shows you, those opportunities are out there where maybe there's a leadership team that sees these hidden gems out there that we're not aware of, but it pays attention to see what they're looking at.
Absolutely correct. I mean, and there's special situations there all the time. It's just you have to look in different places to the majority of other investors. And we open mainstream media and business media, and we find the conversations about the Mag 7 and the Optimus robot. And that's where all the 99.9% of the investing eyeballs are kind of pointing in the same direction. But as with Ouster, and indeed as with Vertical Aerospace, there's far less people paying attention, which means there's room for more value. And I think the stock we're going to discuss today is very much one of those nobody is paying attention, but there could be huge value about to be unveiled in this business.
I love those types of opportunities for us as individual investors, right? If you're going after Apple or Nvidia or Amazon, any of those companies are great companies, but they've also got everybody dissecting
Mhm.
every single earnings report they have out there. It's almost hard to find something that hasn't been already noticed by another professional analyst at any given time. But if you're going into the small cap world of stocks, the hidden gems like we're speaking of here, companies like you just mentioned, the one we're going to be talking about here today, and it's possible those don't have a whole lot of coverage. They might not have sell side analyst reports and price targets already being published out there. This can be an opportunity for us as individual investors to invest anywhere we want to and to find those. Let's talk generally before we jump into CMG, Computer Modeling Group. Let's talk generally about what do we kind of look for in these kinds of situations. And I know before the program here, Emmett, you and I were talking about Chris Mayer, the author of the 100 Baggers book. And we kind of mentioned with Berkshire there, we introduced kind of the idea of compounding returns over time. But if you're looking for a small company, what is the diamond in the rough that stands out that we might, want to pay attention to?
Well, if for those of your listeners, Simon, who've read One Up on Wall Street, seminal investing book by Peter Lynch, I think it was written in 1987. He outlines the different types of investing, stalwarts and fast growers. Well, one of those types of investment that he outlined is special situations where there's something about the business that isn't as easy to detect when you read through the balance sheet and the income statement. I think the example he gave in the book was, I think it was Nina Paper, which was a paper manufacturer. And what was not reflected in the balance sheet was the fact that it owned tens of thousands of acres of forestry. That really just wasn't, the value of that land was not captured appropriately in on the balance sheet with these hidden assets. Similarly, we look for businesses that might, for example, have been spun off from a bigger player recently. So spin-offs can often be special situations because the hedge funds are uninterested. It seems like to the bigger company, the divesting company, they're getting rid of something they don't want. It avoids IPO hype. But spin-offs very often generate a special situation. Well, the one I'm going to talk about today is neither of those, but hopefully, as I say, we'll walk through the storyboard, which as a company goes, the storyboard is not that fascinating. It's a little bit boring. But when I get to the end, I'm going to tell everybody something that won't be so apparent in the slides I'm going to walk through, that I think will move everybody from a 0 to a 1 on the old light switch of interest.
That is the perfect promotion, the perfect segue to talk about computer modeling here in a minute. Emmett, I think one thing that I want to mention before we jump into that is just really how AI is helping information that was previously
Mm.
hidden become more relevant and findable, discoverable, right? It used to be, and this wasn't even that long ago, but it was just a decade ago that I would remember some of these special situations investors. They'd go through the litigation reports to try to find, the hidden assets that a company has, or what is the unlocked value of land or of property, or things that weren't reflected necessarily in just the financial statements, that were reported during quarterly earnings. It's interesting now that you can start digging out a lot of those things with an AI assist, and find kind of companies like we're going to talk about here and maybe some of the hidden sources of upside. I do want to talk a little bit about profit before we jump into CMG. I know that you have built this product on top of AI that is helping you find a lot of hidden gems out there as well. But tell me why you started Profit and why you're so excited about what you're doing.
Oh, well, thanks. Because you're right. AI is changing everything. We all know that. We don't all know yet. Very few of us know where actually it's going to bring us, but the direction of travel is really exciting. Now, the thing about profit is that it is a very, very simple method based way of investing in publicly listed businesses in America, either on the NASDAQ or the New York Stock Exchange, big companies. But the track history of this method is absolutely unbelievable. And I'll throw up a slide to show that in a few moments, Simon, if I may. But right now, the performance curve of profit, which I'll show, since it was programmed by me in December, set live in December 2009, so quite a long time ago, over 17 years ago, it is up 1,834%. In very simple English with profit, all you do is you take your starting capital, you divide it amongst the 10 companies it's recommending. Then 4 weeks later, it tells you sell these two or three and buy these two or three or whatever it tells you. You just follow the system relentlessly. So if after 4 weeks, the seller there to sell company A and B, you divide the funds from company A and B into the two new additions, and the results will speak for themselves. Now, the relevance of AI, Simon, was that the reason it took us 16 years to launch this service, even though we built it 17 years ago, was that we migrated all the technology and architecture onto an NVIDIA chipset.
Love
And
it.
what previously took hours, actually took days to crunch. Every time Profit had to do a rebalance, it takes in data from 60 stock exchanges and flat files that we were getting from interactive brokers. And I mean, that room was getting hot. There was too much data being crunched by too many second gen chips. Now we're on the AI chipset. And honestly, when we migrated the whole Profit system onto an AI tech stack, as our finger was coming off the mouse, the answer was there. So we said, holy schmoly, this is something we have got to set free to the world. And you and I share a passion, which is individual investors succeeding. I know that's your passion, it's mine, and we could have taken and lifted this and sold it to a hedge fund. But no, we're doing it with profit, and profit is beautiful. And you and I have a very special, long-standing friendship, but a promotional deal that is going to is exclusive to Seven Investing, and that is 50% off. I mean, profits results speak for themselves. But you and I agreed just before going live, and this is the first time it's heard anywhere, we're going to offer your listeners uh, a no quibble money back guarantee. So, what does that mean? Well, instead of paying $999 a year for profit, you pay $499 through the affiliate link that we have only with Seven Investing. And if you don't like it, after a fixed period of time that we haven't even agreed yet, just tell us and we'll refund you. So a beautiful product. I'll show you what it looks like when I take control of the screen, Simon. But
Sure,
I am
sure.
so excited to partner with you for this.
I'm excited to promote it for you as well, Emmett. And like you said, we've known each other for a long time. There's a reason I'm endorsing this. It is a perfect complement of the deep research that we enjoy doing here at Seven Investing, and then blending that with AI too. I feel like you're kind of like Jensen Huang meets Clayton Christensen. You've incorporated AI into an innovative stock picking methodology. And here, like you said, I'm at useprophet.com/7investing. This is what the screen looks like you mentioned him, and I'm gonna let you dig into it in a minute because you said you wanted to show some screenshots, but there's the offer right there at the top. You've been generous enough to give us not only a 50% discount, normally $1,000 a year, now down to $500 a year for our audience, which a reminder, this is probably a price point. I can't speak for him, but I think it's probably going to be more expensive than that in future years. You're locking in for $500 a year here today. But then like him had said too, you get a full month to check it out too. For our audience, you get to go try it out, see all of the things that he's offering here. This is almost a really good exclusive deal, in my opinion. I'm pretty excited, Emmett, that we're
It's the
partnering with
best
this
exclusive
company.
deal, Simon. And I tell you, you're absolutely right. And I always feel it's probably Irish culture because I'm in Dublin, Ireland, as you well know. It's almost rude to talk about the price, but it's going up to $2,000 at the end
Yeah,
of this year.
I
So
figured.
you're getting half price off the $1,000 rate. So you know what? You've nothing to lose, folks. Have a look. You don't like it, no problem. Send it back to the kitchen.
Useprophet.com/7investing if you do want to check that out. I highly encourage it. I think this is only good for 24 more hours, right? I mean, did we agree that we were
Oh,
going
yeah,
to keep
that's
this?
true. That
We're
is
on
true. You're
February
right.
the
So
2nd today. I believe you, if I remember, you were going to give the offer through February the 5th at the end of the day, American time
you
here.
said it. That
Yep.
is
Okay.
correct. So yeah, by close of business Thursday night, that it will automatically wrap up. You have to set a timer on these technologies, and that's when that offer will expire.
Perfect. Yep. Check it out. Profit. I'm a big fan of what you're doing there, Emmett. Let's jump into computer modeling group. I know that you've
Okay,
got some
can I
presentations.
share a few slides, Simon?
Go right ahead. Absolutely. Please
Okay,
do.
give me one moment. Here we go. 1, 2, 3. Here we go. If I click slideshow, will I? No, I've lost you. I can't see. Sorry
That's
about
perfect.
this.
I mean, yeah, we see your screen and we can see you too.
Okay. Okay, cool. So, right. Well, Simon, I'd like, as I said, to pitch a stock that is very much like backing the jockey as opposed to the horse. So the next 5 or 6 slides are going to show, or they're going to be terribly boring. So I don't know, maybe we should wear a clown's hat and nose just for the next few minutes.
I've got my coffee, man. I'm ready. I'm caffeinated. Let's go.
Okay, everybody, you go get your double espresso. So Computer Modeling Group is a publicly traded business on the Toronto Stock Exchange, the TSX in Canada, under the symbol CMG, which old investors will recognize as the same ticker symbol as Chipotle Mexican Grill, but CMG in Toronto, but has a US over-the-counter shares available under, as you've put there on the screen, CMDXF, which lets US investors trade the stock without going through the Canadian exchange. Now, this slide sets the context, or this slide on the screen really sets the context for why CMG Computer Modeling Group exists at all. So they say, and I believe, that the era of easy obvious oil is behind us. And whoever would have thought a guy from Ireland would be talking to a guy from Texas about oil? Hey, move over. Let me tell you all about oil. It'd be like you
Who
going
worked
here,
for an
move
oil
over.
company even, Emmett. Yes, even more. Yeah, keep going. I'm with
It'd
you.
be like you going here, move over, Irishman. I'm going to tell you how we drink beer. I'll be like, hold the door. So
I'm keeping
anyway,
my mouth shut about the whiskey. Keep going. I'm with you.
you said it. So, so the era of easiest obvious oil is behind us, and over 70% of remaining reserves are now sitting in complex environments. You know, you don't just drill down; they're deep water. There's unconventional reservoirs, enhanced oil recovery, basically places where mistakes can ruin a business. So, as you know better than me, you don't wing it when you're going for oil. You got to know where you're going and why you're going. And Computer Modeling Group sells the software that helps energy companies understand what's happening underground before they commit billions of dollars into drilling and production. And that might sound niche, as we say here, niche, but it's a mission critical part of the journey. And if you get the subsurface model wrong, you don't just lose your money, you can destroy an asset or indeed the business. So you could say that the harder the problem, the more customers rely on Computer Modeling Group, CMG's science-based tools. And it's a risk management investment that's really wrapped in software. So that's the intro to what they do. Now, this slide explains the value proposition. Everybody stay awake, stay tuned in, don't lose your attention. CMG helps customers to quantify and control and to de-risk subsurface decisions. Knowing where you're going to sink a drill bit is a very important thing. So their tools optimize the hydrocarbon development, they support production planning, and increasingly extend into adjacent areas like carbon capture and geothermal and hydrogen and all that other stuff that goes on below the crust of the earth. And it's all very unglamorous, to be honest. I mean, unless you're into that kind of thing. But the point I'd like to really emphasize here is the last one on this slide, which is the more complex the problem, the more energy companies rely on the business. And that's exactly what you want to hear as an investor. It means there's pricing power, there's high switching costs, there's, I presume, long customer relationships. So CMG software sits right inside customer workflows. And once it's embedded, a bit like so many of the software companies that you speak about in 7investing, Simon, you want them to be so embedded, they're hard to rip out. The cost of switching is too high, the headache is too much, the risk is too great. And that, by the way, is why the business has historically behaved more like a publicly traded university than a growth company. So it sounds a little humdrum, but let's just go a little deeper. What we're looking at here is the business is doing approximately $130 million in revenue, with 2/3 recurring software revenue, mid-30s EBITDA margins, pretty good free cash flow. Like, if you looked at this deck, you'd go, that's good, but you wouldn't, it's not hyper exciting. You're like, okay, right, hold on, there's got to be something else. So it generates cash while reinvesting in its product and acquisitions. By no means is it a number goes up every quarter stock. It's not like Neat, for example, a company I love, a SaaS company, just every single quarter revenue is up compared to the last 12-week period. But it is a compounding machine that is working in multi-year increments. And when I look at where its customer base is, and as you can see from the side slider there, we're just two away from me getting to really what I believe to be an interesting part of the story, is that it serves customers in roughly 60 countries, including super majors and national oil companies and large independent companies, which is terrific for two reasons. First, it diversifies the risk, and CMG isn't hostage to just one basin or one regulator or one political regime. And the second is that it kind of reinforces the credibility. So large energy operators are always conservative buyers. If all of our listeners and you and I, Simon, started a company, we all know intuitively you don't just rock into Shell and start selling. They are extraordinarily conservative vendor selectors. So once CMG is trusted by Shell or Petrobar, ADNOC or Chevron or whoever it is, that trust kind of solidifies, which means new modules and new acquisitions and new workflows and whatever else that they have, is an easier path into customers who are already inside the ecosystem. Okay. So nearly there, folks. Stick with it because this storyboard will change a little in a moment. Now, so this is where the story, the hidden story, I believe, starts to take shape, because it's the point at which Mark Miller enters the picture. And Mark Miller is a veteran enterprise software executive and board director. And if his name rings a bell for any of your listeners, it's most likely because of his long association with the Canadian serial acquirer and 100-bagger Constellation Software and its operating companies, in particular Valaris, where Mark Miller was key there. Now, in September just gone, September 2025, Miller was appointed as president and CEO of Constellation Software, a business, as I said, most of us know about. And he assumed the day-to-day operational leadership after Mark Leonard, the founder, stepped down for health reasons. Now, over the years, this guy, Mark Miller, over at Constellation Software in Canada, built a reputation for really disciplined capital allocation, for building decentralized operating models, and really for playing out a long-term shareholder playbook, which actually became known as the Constellation Playbook. And again, it's something your longtime listeners have heard about in the past. And he's been entirely behind the scenes at CMG, Computer Modeling Group. And the final block to the right-hand side of this slide here is entirely of his doing, I believe, certainly, because in 2019, Mark Miller joined CMG's board of directors as an independent director. And in 2022, he was appointed chair of the business. And he took on responsibility for board leadership, for governance and standards, for CEO oversight, and long-term strategic direction, __. And that is really interesting because this guy, Mark Miller, could join the board of any company. He just could. I mean, if he's the guy who's automatically succeeding the founder of Constellation Software, it in its own right, that it's validation of his business savvy, especially in a business that does successful acquisitions. Now, he stood back from his role of chair in CMG Computer Modeling in September 2025, at the same point as he was appointed as CEO of Constellation, which makes sense. And because, I mean, as the chair of CMG, he didn't run its operations, but his influence was totally there for all the things that suddenly make this an interesting story, and the plot thickens. And I'm going to jump on to the next slide in a minute. I mean, all things about capital allocation and M&A oversight, and even incentive alignment and long-term thinking at CMG are they have all the thumbprints, the playbook of Constellation, which, as we all know, is one of the giants today. So this slide, this is my final slide, and this is me going to do. Here's me doing my best. This is my best pitch. So, so this slide explains how CMG allocates capital, and there's three buckets. There's the core, there's the platform, and the standalone. And core acquisitions strengthen the existing simulation capabilities. Platform acquisitions, like one they bought recently called Sharp, builds ecosystems. And then standalone deals with the optional exploration of adjacent verticals. So what I like most is the decentralization. So acquired companies retain autonomy while benefiting from CMG's balance sheet. It's the typical acquisition playbook. It's, we want to keep what's good about you, but help you with the stuff that we have expertise in. And of course, with any business that's building out through acquisitions, it's risky because you mightn't find good companies to acquire. You mightn't be able to buy them at a good deal, or you mightn't be able to buy them at all. But hold the line, caller. Here's where I think we start to get a little more interesting. A couple of weeks ago, I emailed Chris Mayer, who's the author of 100 Baggers and Where to Find Them, a book that I know you've read, Simon, that I've read. I've interviewed Chris on my podcast, and I asked him, it was he actually ages ago who said to me, "Oh, look, keep an eye on CMG." And I asked him whether he was still a believer and an owner of Computer Modeling Group. And this only a couple of weeks ago, and his response, which I have here on my screen, and I don't think he'll mind me reading it because it's fine. This is what he responded to me in email. He said, "Yes, I'm still a believer and I still own it, and I own more of it than I did 9 months ago. There's a lot of good things going on that won't pay off for a bit, and some really good things that happened that the market doesn't appreciate the full effects of, in particular that Shell win. Next year should be a good one for CMG." Next year, by the way, is this year, because I wrote to him just before the new year. So what Chris was referring to on that November 10th thing was that CMG Computer Modeling Group announced it had signed a major multi-year deal with Shell, turning a decade-long joint development of its co-flow into a fully commercialized product, I should say. So, to conclude, between Mark Miller, the man who is now running ostensibly the greatest acquisition machine in Canada's history, and certainly you could say in the world, in the history of software, and Chris Mayer, who has extensively studied the attributes of businesses that go on to grow 100-fold, this investment is somewhat a back to jockey play. Now, neither of those two men are running the company. That's the job of CMG's CEO, whose name is Pramod Jain, who was appointed the CEO in May 2022. Now, I have strong reason to believe that he was handpicked by Mark Miller. Very strong reason to believe. But CMG's public disclosures say that the board of directors appointed him, not that Mark Miller personally selected him, but I would not be surprised if Mark Miller was very, very heavily involved, considering he was chairperson of the company at that time. So with that, we have a business that's a little bit of a snore fest. And I appreciate at this at this stage, a lot of your listeners are like, "Oh, wake me up, is he gone?" But no, I'm still here. And that is that is my argument, my pitch in a nutshell for CMG.
I love it, Emmett. I'm still with you here. And actually, I was taking notes the whole time. I wasn't falling asleep. I have my good coffee with me and I'm taking notes.
No, it's okay. I know, man, when he's falling asleep. You're falling asleep.
I've got them right here. I've got my paper. I've got my pen and everything. I'm good.
No, that's okay.
Before I open it up, and ask if the audience or Heather has any questions, I did want to just give some perspective. I like this idea. I was a guy who previously worked in a venture capital group of an integrated oil company. And I know for a fact that when you've got big customers like that, whether it's good times for oil or it's bad times for oil, you're not ripping out the reservoir software and the characterization and the management stuff. That's there
My
to
face is
stay.
going red, Simon, that you worked in a oil VC and you're from Texas. I'm getting even more embarrassed.
No, I'm agreeing with you. I'm giving you the thumbs up that this is going to stay. There's no way that you're going to rip out those vendors, especially if they're a small vendor you've worked with for decades. And then that's on the customer side. But then on the other side of it, the acquisition side that you mentioned too. If we look at companies that make acquisitions, you can look at the ones that do it well and the ones that do it poorly. And the ones that do it poorly tend to have way too high of expectations. And they put these giant PowerPoint slides together about how amazing this deal is going to be and transformative. Those are like red flags for big companies, right? AOL Time Warner, one of the worst acquisitions of all time, right? Hewlett Packard Autonomy, another busted acquisition. These big software companies are just going to get bigger and everyone was so excited. But then on the other side, the acquisitions that do tend to do well are these really small, really, really technologically heavy, or you've got the right people with the right relationships, or you've just got this methodical process that tells exactly what the price is that you want to buy and exactly how you're going to monetize this over time. And so you're mentioning a company like this, Constellation Software, another one that's done this well over the years is Roper Technologies. These companies that have got just this format of acquisitions that work, and then they learn from it. They pull overhead out of the acquisition company that they acquire, and then they fold it in. They make it even more valuable to be a whole rather than the sum of the parts. It works. We've seen companies do this time and time and time again. And I really like the catalyst that you mentioned with Shell too. I think that could be the combination of those. You've got a captive customer base, you've got a great strategy with a CEO that knows what they're doing, and you've got a catalyst on the horizon. I'm all for it, man. I love Computer Modeling Group as an idea for 2026.
Thank you, Simon. Yeah, and just like the other two stocks, I believe it to be. So the first one I pitched on your show was Vertical, the second was Ouster, and this is it's quite different. I appreciate it's in the realm of technology, and certain sorry, not in the realm of it is a tech company. There's no question about that. It's a software tech company, but it is also quite different to the other two. It's in an older world industry. The sales cycle into these giants, I'm sure, is extraordinarily slow and painful. Somebody once said to me about the industry that it's one disappointment after the other, occasionally with a glimmer of hope that turns into something you can celebrate. But once you get into these businesses and you're an approved vendor and you've got POs flowing, I think you're in a better place. So I like CMG. I'm not saying it's the perfect investment. There's no such thing, I guess. But I think as an what I wanted to do uh, on your show was bring three businesses that I couldn't detect were discussed in the past with 7investing, and hopefully this is the third of three that ticks the box on that.
This has been a fun series, Emmett. You know, we like you mentioned, we've had you on for 3 shows. I've had a great time. I've learned a lot from talking with you, and I'm excited to help promote you with profit and everything you're doing. We're coming up the end of the last show here. This is the last one we're doing. Before I let you go, I do want to change gears a little bit and just ask you more broadly your thoughts about the stock market right now. With all the knowledge that you have and all the stock picking methodology that you have, we've seen a lot of volatility here in 2026. At the time that we're filming this right now, a lot of software companies are getting hammered. What is your take on, AI? AI has been a bullet train for so long. It seems like maybe it's slowing down a little bit right now. Any overall thoughts on investing in 2026 before I let you go?
For sure. The first thing I'd say is that we've all seen the accelerant that AI is, and on my own podcast, my co-host and I often joke about how Sherwin-Williams brought AI into a conference call. We were like, "Hold on, you guys mix paint. You can't tell me that that red is redder because of AI. It's red paint. Thank you." Um, we've seen the accelerant that is AI, and we've also seen how the big have gotten bigger as a consequence of expectations. Clearly, Nvidia's pure play, but when we look at um, Google, Google has the most, I think, advanced AI engine that everyone is just realizing is not only as good as the other guys, but possibly better. They were just trying to play within um, ethical guidelines that others might have been like, let's just go for it. I
Yes.
believe that it's quite hard to find value at the moment in the stock market. I'd say value investors are finding a harder time. I think CMG is a good example of one of the few businesses that are value. Why? Well, apart from it constantly hitting all-time lows, the efficiency of the business has never been better. So there's always a good thing to invest in. There's always a great investment out there. And as for the year ahead, I'm actually I think probably contrarian is in, I'm quite optimistic. I believe that every business is employed at people to make them stronger, better, de-risked. Isn't that a lovely thing to invest our capital in? That we're buying a room full of MBAs who get fancy coffees free but stay there 12 hours a day.
I completely agree, Emmett. I'm optimistic too, and it's always funny when I see these headlines about the S&P as a whole or the market as a whole is overvalued, or anything that just kind of broad based misses the opportunities that we as individual investors can go out there and find. There's
Yeah.
always a good opportunity every month. I always look forward to finding them.
You know,
Um,
Simon, there's an analogy, and I don't mean to interrupt you, but
yeah,
like
please.
it's like if you were lucky enough to have parents who had a home when they were 30 years ago, when they bought that place, or 40 years ago, they were like, "Oh man, this is expensive. Oh, this is topped out, and this is ridiculous." I mean, the market's at a peak, and the property market's been on a tear, and heck, it's 1978. It ain't going to go higher than this. Well, fast forward to the year 2026, and everyone's parents and grandparents' home, if they had one, looks quaint. And I think that the stock market is I think that's a parallel to the market. Of course, everything always looks expensive. All quality always does. Yep, the market might downturn. So what? We're investing for the next 30 years.
Very, very true. Once again, if you want to watching this show and we're interested in computer modeling group, again, that's CMG on the Toronto Stock Exchange. But if you're buying it here in America and you want the ADRs, that's CMDXF. You can buy that ticker You can buy that stock with that ticker. Emmett, man, I've had a lot of fun. This has been a really fun 3-part series with you. Thanks again for being a part of the 7 Investing Live experience.
It's my honor, Simon. I was so delighted to be invited on, not once or twice, but 3 times. I'm like a bad penny. I'll always keep coming back.
And
It's
use
an Irish expression, I think.
profits.com/7investing if you'd like to follow along with the exclusive deal we're only offering through February the 5th. So one more day, 24 more hours if you want to get interested in that one. We're going to be taking Friday's show off. This is Super Bowl weekend, which is the national holiday, at least in the Erickson household. We're going to be coming back, trying to wake up early on Monday after the big game. And we're going to be talking about another exciting sector early next week. We're going to be talking about semiconductor sector. And I've got Robert Quinn, is a semiconductor ambassador coming on. We've got the Chip Stock Investor Group, Nick Rossalillo and Casey Rossalillo on Wednesday. And then we're going to be shifting gears on Friday of next week and talk about a less loved sector, which is biotechnology with Manisha Samy next Friday. So excited about what's on tap for next week. We've had a lot of fun talking with Emmett, and please check out the offer that we have with 7 Investing and Profit there. But we'll be back with some more shows for you next week. In the meantime, I hope you have a great weekend. Be safe, be kind to one another, and we'll see you again on Monday.